Good morning, Vietnam. Hope everybody's having a fantastic day today. Let's go ahead and make sure you all can hear me. If you would type the number 1 in the questions box to let me know that you can, I would greatly appreciate it. Oh, thank you, thank you. I hope you're all doing fantastic today. A little bit of a late start for me. I was in Seattle last week, got back on a red-eye Saturday into Sunday. With 50 minutes of sleep, 5-0, between the airport that I sat in first and then on the plane, so did not do well. These first class seats did not recline fully. They were not the business class, so it's a little tough to sleep when you're at about a 15-degree angle back or so. A little hard to get a decent night's sleep in there. But it was a very productive trip. For those of you that remember Mr. Ryan Litchfield, I got to have dinner with him and his wife, which was fantastic. We got to spend some time there, and it was funny how much trading we actually talked about instead of catching up, since we haven't seen each other in about a year or two. It was fantastic. Thank you for that, Helen. I appreciate it. Morning, Ed. Robin, as far as the additional power hours, whatever's up on the site right now, let's see. Whatever's on Wealth Builders now on the Wealth Builders HQ TV is what I've got for power hours. So I've got the 10-2 one up there. I did not put the 10-9 up. And basically what I'm doing, guys, is my goal is to go forward and start putting up from the previous week's power hour. So in other words, I will put up this week's last week's power hour up this week. Right? I still want to encourage the live viewership here and people not to take for granted that they don't need to be there live. I understand for some it becomes a challenge, but really, I personally, I prefer not to put the live up at all. I mean, the recorded up at all. But I will, because I know so many of you are in situations that you can't get to see it. I just don't get the chance to do it right away, so the week after is usually where it winds up. Since I leave many weeks now on Wednesday early to teach, by the time we're finished on Monday, get ready for Monday night's class, the E-mini Think Tank, it's a little hard to get them done. So, but we'll try to get a better system in place. But for right now, we'll get the one up there from next week, last week, this week, Robin, so you'll be able to watch that one. Let's go ahead and jump into our disclaimer. It basically says that I am not an advisor and cannot legally tell you to buy or sell a stock. It is against the law. The SEC, which is the Securities and Exchange Commission, requires you to be licensed in order to do so. I am not, and I do not want to be. So if you find a candidate, an indicator, a trade setup, something, anything you like here today, my suggestion is you paper trade it first before ever putting 1 penny of real money into the trade setup or indicator, and then only then would you do so if it fits your own personal risk profile and risk tolerance. Now keep something in mind. Because I am not an advisor, that means I am not under trading restrictions. That means that I may choose to enter or exit a trade at any given time without prior notice. Let's see, Ed, am I teaching anywhere in the St. Louis area? Not at this point, Ed, don't know of one. I mean, I've got one coming up in Kansas in a couple of weeks. But this is a private group that I'm teaching for, so there's really no introductions there or outside people brought in. It's their students, right? So there's really not much I can do for that. And everything we do is super, super, super duper basic. Take as an example a better trades education, cut it down by 1/10, and I might teach that much while I'm there. So very, very simplified. As soon as I mention, I'll give you an example. We don't even talk what bid and ask are. We just talk about trading at the midpoint. So if the bid and ask have a 50-cent difference, take the mid of it, and that's what you trade. And there's a place right on the chart that you could just click on that. So, I mean, that's the level of where these folks are at as far as their education goes. All right, so, guys, upcoming workshops. I have Monster Market Movers coming up on this Thursday, the 19th. So make sure you go ahead and get yourselves registered for that. Of course, Power Hour each and every week. Tonight will be our Trader Talk. And we just did get Fibonacci Secrets revealed up on the website where you can subscribe to that now. So that's all there. So let's take that down. Guys, go ahead and let's go ahead and start off with, I want to start with S&P 500 on what the S&P is doing, and then we can take a look at some of the symbols that you guys have of what you want to look at. So look at a daily chart of the S&P 500, right? On TradeStation, $INX is the symbol for it. And you can see, folks, in the last 5 or 6 days, we've had slight increases up, but if we really bring it in there, if we really bring it in and grab a horizontal line, you can see boom, 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 boom. 5 days in a row, we've got a huge level of resistance at that 2555.55. Well, actually 0.72, but 2555 and 3/4. Right about that level, we've got a tremendous resistance there. We pushed up above it today. We did get to the highest high on the S&P 500 today, and we are pushing those highs each and every day, but we're not getting ahead. We're getting a higher increase in our moving average, so we're looking for a breakout. Ideally, we'd like to see the break to the upside. Whether that's where it's going or not, I don't know, but we definitely need some direction here. The breakout will normally come with a vengeance, meaning it'll come with some strong volume to it, and usually a big move. When I say big, the candle will be bigger than the normal candles are. So Andrea said, S&P seems like it can't hold the highs, but it's not breaking down. Exactly, Andrea, and that's where we're at, right? So, we go back, and this is a daily chart. So we go back and look at the daily chart, guys, and we run, ABC patterns on it. Let's see, we'll go from A to B to C. You can see that 100% level was 2550. We're just slightly above there. So it's not like we are out of the woods, guys. We are right at a very critical area on the S&P 500 in there. So we definitely have some concerns. And if we just drop a normal fib, same A and B points that we just triggered off of in there, let's see if I move this down a little bit. So this 25, 55, 72 level, right, the horizontal line, we've got the 2550, and we have a 25, 48, 38. So guys, there's a lot of strength there. If we do push above, we're looking at a zone somewhere between the 272, which is 2567, and 2572. We're looking for a zone somewhere between there as our next target, with an ultimate of 2589 is our next push up. But let's see, if we just draw a little rectangle in there to give us a zone, and that's what that will represent when we look at it between fib lines or other indicators with horizontal support and resistance lines. We're looking at a zone inside of that range, right, as our target. So somewhere between 67 and 72, 5-point move on the S&P. So guys, you've got some caution to contend with here on the S&P, right, as far as where we're at now. If it does break to the downside, well, actually, look at that. Watch this. Oh, let me bring it current. Okay, so if you look at the fib lines are kind of messing it up a little as far as height on the screen. But if you look at the downside, guys, if it does pull back down, I was starting to say it's got to break the 8. Well, my negative 618 there is where the 8 is at. And we're right at a fib line with a confluence there today, right? So critical area even on the downside. So on the upside, we've got fib resistance going on. On the downside, we've got fib support going on. Either one are looking at a potential break, and that's what we need is a push either way. It's got to go. Can't keep doing what it does. It will break out, and normally the break will be fast and hard, right? Which direction, I don't have a clue yet. So Robert, morning, sir. Tax extension filing deadline today. Where are we today? Tax extension filing deadline for what? For what extensions, Robert? I mean, for me, I thought we had to file them before the the April 15th deadline is when you had to file them for personals. For corporates, I have to file them before my year end. My year ends are well, my primary one, my Nevada one, is March 31st, is our corporation. Oh, for 1040 S. Okay. Okay. Well, it's good to know. Appreciate it, Robert. Andrea, I never understood fibs. It seems overly complicated and cluttered, the charts, but I noticed it's your preferred indicator. Andrea, as far as I'm concerned, there is no indicator that has any other importance in the world outside of Fibonacci's. We use things like moving averages very heavily, but they are more secondary, and some of the indicators even tertiary, like CCI. It's important to me, but it's not a primary. And the reason for it, Andrea, is that when you look at Fibonacci's, and I talk about them being a harmonic indicator, they are just that. They are harmonic in nature. And what it helps us to do, what it allows us to accomplish, to appreciate, is that as the market tends to move and some traders are getting in or out of the market, right? Traders are entering and exiting. A harmonic trader is usually entering the market earlier, exiting the market right as the other traders are entering, and I'm usually the one selling my position to you. So if we looked at a, let's see, here's paint, right? Let's see. If we look at a bell curve, and I'll do the best to draw it freehand here, but if we look at a bell curve, right in here, so, and if you looked at the standard, standardization of that, your sweet spot as a harmonic trader is going to be, somewhere in this area right here, is entering the trade right there, right? That's the sweet spot. Most traders tend to enter the trade right around here, in this area. That's where most traders tend to get in. Actually, some of them are still buying here. All right, we'll make it bigger instead of multiple. So, the bottom two on the left, Andrea, is where I will tend to get in, and I am early to the game, and I want to be, because what's happening is Wall Street's the one that's driving that move, not you and I. So if we look at a chart, and I don't know, we'll just grab one and I'll try to make it up as we go. Let's see, I'll pull up Apple. Let's see. All right. So Andrea, I'm sitting right here in the market at this point, right? Let me see if I can zoom in just a little bit more, make it a little bit bigger. And again, not prepared, right? So I hope you get the gist of where I'm going with this. Well, we've got Fibonacci's drawn on here. We push up to a resistance level. We got above at that point. So my entry now might be, hey, if we get above that, whatever that zero line is valued at, which is 159.79, right? If we get above that level, maybe to 160, I'm going to go ahead and take a bullish entry, with the consideration that if I am wrong, my stop is going to be somewhere down in here, right? So I have very small risk in that trade. Okay, so then we go one day forward, we move above, we're in that trade, right? We did a pullback, we move up, but you get the idea, right? So at this point, other traders are looking at it saying, okay, once we get above this resistance level in here, this previous high, that's when I'm going to enter into the trade. So the next day, right, so I'll just snap a line off of that. And I got to be careful. Actually, let me do it here. That's the best way to do it. Okay. So the next day, we gap up and we pull back. Well, we had a bearish day that day, so I'll wait and see if we climb up the next day. And they finally are getting in at 164. Well, I'm in that position at about 160. I'm out of the position when it gets up here to 162.5, and other traders are not entering to 163, 164. Right? Now, I'm not saying that they were wrong in the entry, but they would have been wrong in the entry, right? Dramatically. That is, as a harmonic trader, Andrea, Fibonacci's helped me with areas to understand human emotion in the trade. And what I mean by that is, guys, I'll give you a great example. If you guys remember Ryan Litchfield as a coach, type the number 1 in the questions box, just so I can see who's in the class and as far as remembering that and so forth. Just go ahead and put a number 1 in the questions box, right? So Ryan Litchfield, before he and I started teaching together, what I mean by that is Ryan started coming to some of the MEs that I taught when I was teaching a 2-day workshop for another company for Better Trades. And he would come along and he would start teaching with me. Well, I would be teaching my stuff. I'd talk about Fibonacci's. And then some of my students would go into Ryan's Trader Talk and say, hey, what about these fib things that Rob uses? And Ryan's comment was, way too many lines on the chart. The importance level is not there because sooner or later it's going to hit a line, right? And Ryan and I got together one day at a company meeting, and he and I sat down talking strategy and style. And he said, you know, I don't really understand fibs. You know, I don't want to be ignorant on them, so explain it to me. And as I went through and started explaining it to him, the ahas start to kick in. Now, does Ryan do things the same way that I do? Absolutely unequivocally not. But we're at a Trader Super Summit, a 3-day event we used to teach, a multi-speaker event, and Ryan gets up and says, guys, check this out. And he says, one of our coaches uses Bollinger Bands, and he throws Bollinger Bands up and said, look on this signal would have happened. You would have entered the trade here. This would have been your exit. Awesome, right? Rob uses Fibonacci's. We would have entered the trade here, exited the trade here. He puts the fibs on the screen. He said, same signal. Ryan's what's called a bracket trader. He puts his up there. He says, I enter here, exit here. He said, all three of us entered and exited in the exact same place. He said, we use different ways of getting there, but we got there. Here's the funny thing about it. We're teaching an event, Andrea, and I talk about in Fibonacci's retracements, pullbacks. So let me do a new slide here. Right? So we have our series of Fibonacci lines in there. So the stock started here, ran up to here, right? And it looks something like this, right? And then it made its pullback. And there are other lines along the way. One of the most critical lines is the 50%, and I'll put some tags on these in a moment, and the 618, right? So this is 50. And then this is 61.8%, or 0.618. Okay, I guess I didn't draw the box. 61.8%. Okay, right, perfect. So I would tell students that ideally you want to see this bounce off of that 618, like that. And Ryan was up teaching in front of the class, and he called on me to say something about fibs. And, no, actually it was the other way around. I was teaching in front of the class. Ryan was in the back, and Ryan said, Bob, can I jump in for a second? And I said, sure. And Ryan says, well, Rob, the way that I learned it is if you get a pullback to 50% of the original move. So if you had a $10 move up and it backs off $5, Ryan said, just let it go a little bit more, and that's where it's expected to bounce. I said, oh, you mean the 618? And Ryan basically said, holy crap. He said, I've been using Fibonacci's all along, just didn't know it. Exactly. We all do. We just don't know it. You look at a house, you look at a piece of art, you look at a piece of woodworking or pottery, and you say, it's kind of ugly looking. More than likely, dimensionally, what is pleasing to the eye or Fibonacci ratios are not there, right? So, Andrea, it may seem like, and Ryan never, ever, ever, ever again, and to this day we'll tell you the exact same thing, never, ever, ever again stood there and told people, hey, you know, there's too many lines on the chart. Now, are some lines more important than others? Absolutely. There's a 382 line on the charts. I don't use it at all. It doesn't mean anything to me in 99% of the situations. It's not a very valuable line, but it's one that is a fib. It does work sometimes, but not my mantra of high reliability, high reliability, repeatability, and predictability. The 382 does not do that for us, right? So it doesn't have the power inside of that line, but the 618, the 50, the various setups, Andrea, these are powerful is an understatement as far as how strong and how well these lines move. So guys, I'll go back to, we'll go ahead and we'll go back to Apple, right? So here's the most recent Fibonacci drawn on Apple. I will zoom in a little bit on it, right? So Apple pulled down right to the 618. It gapped down the next day. This gave us a Fibonacci 4-step trade. Perfect, phenomenal results. It worked amazingly. We got a bounce off of the 618. It's expected we're going to move 2 lines. We did, and we failed. bounced again, 2 lines, we failed. Finally broke through, right? Every single thing that happens on this chart has purpose and meaning to it, right? Here's an old Fibonacci, right? We had a nice breakdown, came back up to that 382 false break, right? Is what I call them, a false breakout, not one that I'm interested in. It pulled back. Came up again, it pulled back, right? We pushed up. If we drag this Fibonacci out, it pushed up and failed at the 618. It pulled down. It went up here to the 764, gave us a Fibonacci 4-step. Perfect trade setup, phenomenal money made there. So there's a lot of opportunity with Fibonacci's. I guess the biggest question, and Andre, I'm only using you because you had asked the question. I'm sure there are many others that are unfamiliar with them, and they look at this, and it's either confusing, and part of that is you just haven't been conventionally trained, right? It's confusing to it, and you just don't fully understand how the various setups work. When I talk about H pattern setups in here, guys, which is what this would have been right in here, this upside down H, amazing move, and we went from 152 to 155. So $3 profit, $3 move in the stock. So you're looking at what, $2, $2.50 on your option, depending on what you bought, right? Great potential in there on a very high probability setup. So Lisa's asking, do I ever use fib fams? If so, when would you use retrace versus fans? I really don't use the fans, Lisa. I don't find, and I've done some testing with them, nowhere near the amount that I should. I don't find the reliability versus the reliability in, let's say, the regular Fibonacci support and resistance tool. That seems to give me much more credibility and reliability in my signals than the fans do. Right? Fans give us the angles. Right? Let's see, Fibonacci fan, and we've got speed lines as well. Right? So you've got these retracements when we break and we pull back through. I tend to use more of the horizontal, Lisa, than I do the diagonal lines for it. I just don't find that diagonal to be as accurate in there. Let's see, so Andreas said, for whatever reason in trading, I let my losers run too far so my winners cannot make up for them. They will get so far away from me that I just forget it. I let it, let's see it. All right, so I'm going to try, one of the things I'm not really understanding that, I might as well, let's see if it can bounce. Okay, I think that's what it is. I might as well, let's see if it'll bounce. What do you recommend to stop doing that? And should you just, what to do to the work on psychology? Okay, so a couple things, Andrea. I teach a systematic approach called the 4-3-2-1 exit system, utilizing Fibonacci's, and that really is, of every trading system out there, every systematic approach, and it's 4 key phrases: identify, enter, manage, exit, right? Of those 4 key phrases, Andrea, you've got to have a system with that built into it: identify, enter, manage, exit. They also need to be proven and tested rules, and we use Fibonacci's to go through and to do that. So as far as psychology, I think a big part of it is learning to trust the signals, right? And until you learn to trust the signals that you're taking, the psychology will never be right. How about that, Andre? It'll never be good because yeah, it's a signal, but boy, I just don't have the full faith, and belief that this is actually going to do what it does. Yeah, it looks like maybe, kind of, sort of, almost a little bit, could be, but right? You've got to have belief and faith in that signal. When I see a stock move down to that 618 and bounce, and all the rules are met, I take the trade. I don't care what the market's doing. I don't care what else is going on. I take the trade. Why? Because I've traded tens of thousands of them, and I can trust the signal. I trust that 5, 6, 7, 8 out of 10 will be right, and I will have a very small number of risks of losses with a very small dollar amount of risk in that trade. So Andrea, the Fibonacci Secrets Revealed seminar that I taught, it would have been great if you could have taken it live, right? I taught it once. I'll never teach it again. It's done. It's up online. It's a $99 workshop at this point. I highly encourage any of you that are not familiar with it, this is the place to learn it, right? For $99, well worth each and every single dollar that you would spend on it to learn how to utilize Fibonacci's to your advantage. So Paula said, is the Fibonacci support resistance the same as Fibonacci retracements? The reason I'm asking is because I have found Fibonacci support resistance in TOS. It probably is. So when we look at it here, oh, that was Paul. Sorry, I thought it said Paula, because Paula has a question there also. So when we look at it here, Paul, it says Fibonacci support and resistance, right? We go over to TradeStation, and it says Fibonacci price retracement lines. So more than likely it is the same thing. When you draw that out, Paul, when you snap it on the screen, you should see multiple, bad one to use because I've got a fib drawn there already, right? So it's just overlapping. Well, but when you draw it, I'll do it down here, right? You should see numbers like 618, 5382. You may not see some of my settings in there, but 618, 5382. If you see that, then you've got the right tool inside of there. Lisa said, good to know. All right. So Paula said, I don't have fibs extensions on the platform. Oh, that was Paula. Okay. I do have the retracements. Okay, so I think that was the same question. Paula said, what can I use instead of ABC? Yeah, the ABC is a different tool. Let's see. Linda, how are you, dear? Where is the ABC symbol on Trade Navigator? Do you have to make an adjustment for it? Well, there is a tool on there for it, right? And I've got different ones that many of you don't have. But you see this one that looks like a V, and then it's got red, green, black bars next to it. It says Fib Extensions. That's the ABC tool. That's the ABC tool right there. Andrea said, it is not taking the trade and getting in. It's the exits and it going against me. That's the problem. Right, and Andrea, that's what the 4321 exit system will teach you, but you need to learn Fibonacci's first. So a great way to look at that, Andrea, is this. Let me see. Let me scroll through a couple of charts here. Just getting a different fib to work with. And I may just have to go along, go back in reverse to find one. Nope, so let's see. Let's go to Caterpillar. Nope. Let's go to Google. All right, so let me go back to Paint. We'll use this here. So Andrea, the way the signals basically work is this. We see this bounce off of here. We're going to take our entry right there, right? Where that star is, that's our entry, right? We have various fib lines along the way in here, right? This one would be the 38.2%, right? And then so forth, right? And then there's a 236 in there also. But we're going to take that right there, and then our exits are going to be here, here. Let's see, we need another line in there. We need a 236 here, which is the 236. That will be our next exit. Right in there. And so basically 4321. We're going to exit 40% at the first line, 30% at the second, 20% at the third, and we're going to manage the last exit with a 5-period exponential moving average, right? And our stop is going to be set just below the 618, right? So now this is one way, Andre, to look at this exit system, okay? But if you don't have basic understanding of Fibonacci's, it doesn't matter. Nothing. The exit system won't work because you have to understand why would I take that bounce off of the 618. You've got to understand that that is the most important, highest possible entry, any entry, period, the end in the universe comes off that 618. There's no other number that is more important than that 618. Now, you could use other indicators to confirm it if you need to. I do not. I've gotten to a point in my trading career that I've been able to eliminate them. I do not fault someone that says I add Bollinger Bands or I add an oscillator like stochastics, MACD, CCI. I have no problems with that whatsoever. None. It's just not ones that I have to or tend to have to use. So Andrea said that it only works if you have 2 more contracts. What if I have only 1? Then your exit is the 50% line. Because Andrea, when you understand fibs, which you will after you take the Fibonacci Secrets Revealed, this, let's see, this move up to 2 lines, at that point we will be out of 70% of our trade. We'll be out of 40% in total by this line here, right? Well, the reason that we scale out like this, Andre, and if you have 1 contract, you really have no choice but to take it out at the first line. You don't want to hold on and be a pig and try to get to the second line. You'll get slaughtered, right? Your head handed to you in most cases. The reason for us getting out of so much of this trade by the time we get there, Andrea, is when it comes to standard deviations, is 96% of all data points fall within the first 2 standard deviations on the line, right? Well, that second standard deviation is right here. This is 1, this is 2. We need to be out of the majority of our trade by the time we get to that second line. Period, the end, we've got to be out of them. It is way too risky to start thinking about getting out above that, in my opinion. I have had way too many times where I've got my head handed to me, hundreds, thousands of times, gotten my head handed to me by saying I'm going to go further than that. Right? Let's see. So Apple pulls back like this. We took a very specific trade setup and we got out. Yeah, it ran further, but we got out right here. We would have taken another trade, another entry this day as we got back above the 152. We would have scaled out of 4 of our 10 contracts here. And let's see, we probably would have got taken out there as well, 55, 50. Yeah, we're 25 cents away. So we would have been taken out of the next 3 here. And then what happened? We failed all the way back down to where we started. Had we held on, we would have given all of that back. So we take the trade again. We scale out of 4. We scale out of 3. We failed. We're stopped out of the rest. See what I mean? Now, granted, it finally ran, but would you want to be getting into the trade on the 26th and here on the 4th, you've already failed twice and pulled back to almost where you entered into the trade originally? What's the likelihood you're going to hold on? Probably not very good, right? So the whole system allows us a rules-based identification, entry, manage, exit. That's exactly what it is. Every single bit of what we do focuses on those 4 components and make sure without a sliver of a doubt that we will be covered in this trade. We've got entry rules, bounced off the 618. Exit, somewhere below the 618 is going to be our stop. Management, we're going to exit the trade along, and then when I said exit, it's your stop, right? Your original stop. Management rules, I'm going to exit 4, then 3, then 2, then 1, right? And Andrea, just as an FYI, I have many students that do this with 1, 2, 3, 4 contracts. They don't do 10. It's when I drove out or wrote out 4, 3, 2, 1. Notice I wrote 40%. 70 is the total, right? So this is 30%, 20%. And you're going to manage the last 10%. So if you only had 4 contracts, it's 1, 1, 1, right? If you only had 1 contract, it's just that. It's 1, and you're out of the trade completely. I think I got that. All right. Andrew. How you doing, Andrew? Is the fib retracement in TOS? That's what I use. Yeah, I'm pretty sure that's what it's called, Andrew. I need to probably look at it and see. You're welcome, Linda. All right, so Paula, I found the retracement, but not the ABC. Paula, in what software program are you looking? TOS. I can't tell you in TOS, Paula. I would ask them. I would call TOS. They're pretty good, guys. I mean, I've had them on the phone before. I've called TOS. So in TradeStation, we call it Fibonacci price extension lines. In Trade Navigator, it's called Fibonacci extensions. So just ask them for Fib extensions, Paula, and they should be able to tell you if it's available on there or not. I'm pretty sure it is, though. Andrew said, I was just confirming it was in TOS for the other participants. Okay, thank you, Andrew. I appreciate that. You're welcome, Paula. So Andrea said, what's the point of Trade Navigator if you can just use TradeStation? Andrea, I'll never give up Trade Navigator. The scanning features and capabilities of what I'm able to do in here is so phenomenal compared to what I can do in TradeStation. You can filter and scan in TradeStation, but man, it is an absolute bear. It's the one thing that I dislike the most of TradeStation and TOS, both of them, are their scanning and filter capabilities. What I can do here is a lot easier for me to work with. So scans and filters are one. Number two, I don't need to be online. TOS, TradeStation, I have to have internet access. I ran charts for a couple of hours on my way from New York to Seattle just looking at charts without having to pay $18 to get internet access on the plane because I can use them over and over again. So Robert said for TOS, use fibs and put in the different levels that you want if it's not already there. Robert said he uses them every day on TOS. Yeah, and Robert knows fibs inside and out. Guys, they work. They truly do. Andrea said, at what point should someone say they might be maybe trading is not for me if they have been trying for many years with no success? Andrea, I really think it's finding the right system. And part of the problem, so I'll use a Better Trades as an example. Well, actually, I won't even use that because it doesn't matter. Part of the problem with traders is they're always looking for that bigger, better deal without really doing the work required to be successful at one thing first. So you may look at different instructors, different coaches, and find that their system maybe more fits your personality, your risk profile. I am very big into very minimal risk with very large potential gains. That's, as a directional trader, that's what I look for. I can train anybody, Andrea, to trade, and I think anybody can learn fibs. I know anybody can learn fibs and learn to trade with them. So I think it's finding the right system and becoming successful with that right system. And realistically, Fibonacci's, to me, is, if you're looking for directional trades, is the way to go. If you're looking for less time investment, less work, then things like covered calls, spreads, iron condors are less work, higher probability of being right, less profitability, but higher probability of being right. Why? Because I have at least a 2 out of 3 chance of being right. In a covered call, the stock can go up, it can go sideways, I'll make money. It can go down a little bit and I'll make money. If I buy the stock or just buy a call or a put, it has to move in my direction only for me to make money, because I'll have time value deterioration on an option, right? And then I have just cost of borrowing money if I'm doing it with stock, right? So I buy a stock, I hold on to it 1 year, it didn't move. It was the cost of money that, what I could have made elsewhere that becomes the factor there. So I don't think, for me, giving up it should never be the option, Andrea. I think anybody can learn how to do this. I really think it's digging in and finding a very systematic approach. I am working right now, Andrea, on putting together a coaching/mentoring program where and I've done it before in the past, but where you'll be able to physically work with a mentor, and you'll have very structured setup of what to do. They'll work with you on Skype. They'll be moving forward and giving you direction of what to do, checking your results, helping you identify weaknesses, strengths, and so forth. I don't have an ETA for it, but we do have the outline of the program is complete, and we are in discussions right now with some coaches on getting that done. So hopefully I'll be able to utilize something like that, teaching my methodologies, my systems, the strengths that I have to you guys. I just don't have the time to do it personally to you guys, but more in a one-on-one setting instead of a let's get on an online internet where there's, we got almost 100 people in here today. right now, right? And they're still climbing because every time you hear my phone go off, it's somebody else registering for Power Hour, right? For today's class, jumping in. So hopefully, Andrea, that helps. So Joan said, in TradeStation, what do you call the fibs? So Joan, there are two primary tools that I use for Fibonacci's. The first one are these horizontal lines, and when you hover your mouse over it, it says Fibonacci price retracement lines. And I know you can see it on the screen because I'm looking at it on another screen here, right? So Fibonacci price extension retracement lines. Then we get to this little V here, and it says Fibonacci price extension lines. That is the ABC pattern. And there are other fib patterns, time ratios. Well, that's a GAN, right? That's time, it's not fib. We've got fib cycles here, which are similar to time ratios, right? And then there's a retracement calculator. So those are the two tools, Joan, that we use primarily. Andrew said, I found as long as the technical system is consistent and the risk reward per trade is correct, it works. So guys, I can tell you in what I've taught for years, which was we call the market insights, and I called it a day in the life of the trade because we follow 20 stocks and we identified entry and exit rules on each of them. The exit was pretty simple. The stop was pretty simple. We knew where everything was going to be every single trade, period, the end, and consistently over and over and over again, we were able to produce with $150,000, we were able to produce $1 million plus in results every single year for about 3.5 years that I taught that workshop. And then now for the last year plus, we've been about the same thing. A little bit more money required, and this one closer to 200,000. And when I say closer to 200,000, that's to make, $1.5 million to need 200,000. So if you had 20,000, you're not making $1.5 million, you're making 150. But 200,000 to 2 million, guys, it's a 10-time increase in the portfolio. Even if you only had a one-time increase in the portfolio, you took 100,000 to 200,000, you took 20,000 to 40,000, and everything, Andrea, and for all of you, everything that I did in there was Fibonacci based on 20 stocks only. Period. Just 20 stocks is all we did it on. 10 contracts or 4 contracts. 10 contracts was a normal day. 4 contracts was an aggressive trade. Guys, it really comes down to finding a systematic approach to the how. So, Andrea, one of the things to consider, and for all of you, guys, I teach Monster Market Movers. I teach a class called Monster Market Movers. Well, the next one is this week. Right? In Monster Market Movers, we will go over multiple Fibonacci candidates in there. Let me see. Let's try to get this thing moved over here. Andrea, the name of the class was Fibonacci Secrets Revealed, right? So if you look right here under Store, right, you got to be logged into the page under Store, and you click on Learn More, it'll take you there. What, for some reason, I don't know why the web guy didn't do it, but it's a $99 class, guys. So if you click subscribe here, it will take you into the form, and you'll see it. Guys, this is just like we've done in the past. 30-day access to the class. It says it right here. 30 days, it's $99. Okay? There is a manual for it. There is a video for it. A little more than 2-hour long video for it in that. All right? So that's number one. But guys, also, again, this week is Monster Market Movers. Every week or month, I teach this class. In Monster Market Movers, we have a series of candidates, and some of them are fibs. Last month, we probably had 150 Fibonacci candidates, and 30 of them or so were ones that were ready to work right now. And we go through in the prerequisites the Fibonacci 4-step trade. We go through the Fibonacci channels, all of that. And actually, let me see. So here's Monster Market Movers. Guys, it's a 2-hour workshop that comes with 4.5 hours of prerequisite videos, 12 of them in total. Prerequisite videos are here. And then you've got the manual for the workshop, the addendum manual, the recording of the workshop, the recording of the Fibonacci candidates. I mean, there's a lot there for a 2-hour workshop. You're looking at 6 or 8 hours worth of recordings alone. So Andrea, just to recap, Fibonacci secrets revealed, and then consider the monster market movers. Al, how you doing, my friend? Have you retired yet, Al? On TradeStation, I see equities, options, futures, forex. Can you briefly explain those trades again? Looking at starting again, had a big hit last year, kind of forgot. Yeah, sure, no problem, Al. So on TradeStation, depending on what you want to do, Al, right? If you just want to trade stock and options, well, you'll have the futures and forex tabs. You just won't have access to them. I have equities, options, and futures. So equities and options are one account, right? Futures is another funded account you have to have. That's one major benefit of a Thinkorswim, is I can trade all three of these out of one account. Forex, there's only 2 or 3 brokers left in the U.S., period, that are U.S.-based brokers that you can trade Forex with. What that has done, though, in my opinion, that has set us up for complete and total failure. And what I mean by that is brokers are ripping people off right now, and again, in my opinion, in what they charge in pips and so forth. There are many overseas brokers that you can use. I prefer to use futures on Forex, and I trade those all the time. So in TradeStation, as an example, let's see. So here's the Australian symbol, right, for the full Aussie, and here's the micro. So the top row is the full Australian. The bottom row is a micro of it, right? So now you'll notice, Al, the futures tab is highlighted here. Why? These are futures contracts that I'm trading. Who's the broker, Robert, on TAS? Because Thinkorswim is not one of the 2 licensed brokers in the U.S. that are Forex. There may be someone else in the background there. But Al, you'll see that I have futures is highlighted. Now, I didn't do anything to make it highlighted. If I change this over to Apple, right here, you'll notice it changes to equities. It did it automatically. Okay? So it did it automatically for me. And if I had it as a Forex symbol, or if I wanted to look at an equity option, then it would change over to options. So that's basically what you're looking at there, Al, as far as those 4 tabs. Okay. Robert, do you have it in the same funded account? So in other words, do you have one account with Forex and futures, or is it a separate account that you have in there on Thinkorswim for TD? Let's see. Al, let me know if that answered it. If not, tell me the next part of the question. I'll gladly do that. Andrea said, what were you just discussing where you tracked trades before and did well? So that was a class that I taught, guys, many years ago. I teach something for it now. It is a closed group. One of the affiliates that I work with, when I came out and offered a discount on it, called me and said, dude, this class started out in my group only. I will buy every one of those seats immediately right now and guarantee you those numbers in there. I want you to keep it in-house for now. So I agreed not to continue to teach it outside of there. We literally filled it up. I mean, once his students found out about it, because it was closed for his as well, I had 30 of his students sign up for it within 5 minutes, and many of them are in here, right? Well, which is where I got that phone call, and we had to go back and we went back and talked about it. So it was a class that shut down, as I said, within minutes. It was closed down of where it is. So I don't have it right now, Andrea. It used to be, what I used to call it was my market insights. Yeah, Al, great to hear you back. Thanks for the quick explanation. Have not retired. They sweetened the deal to stay temporarily, maybe a year or 2. Getting married in October, fantastic. I get it about making more money, Al. It's never enough as far as I'm concerned. Let's see, Andrea, so what's the timer you have on the charts and TradeStation? That's one that is no longer able to download, Andrea. We're working on a new one. One of the students that are in the E-mini think tank for us has found another one. We just haven't released it yet. But it is a free, there will be free ones. I'll tell you what it is when I find out. Bill Mahoney, let's see. TOS was created by Tom Snoz. Yep, Sazanoff. He's now created his own Tastyworks. Absolutely, I've got an account with them. They only charge commissions on entering but not extraing the option trades, so worth considering to save money on commissions. It absolutely is, Bill. They've done a good job with it. Customer support has been my biggest concern of getting help, but their commission rates blow away TradeStation and Thinkorswim for sure. So you're 100% right. So you had to set up, Robert said he had to set up a separate account, but they don't, you don't have to set up the monies, they just mix the dollars in. All right, that's great to know, Robert. Because again, in the workshops I teach, I have students all the time telling me that they can't trade Forex on TOS. So again, I don't trade it with them, so I'm not sure. Do I trade the micro? I love trading the micro, Joan. I think for a brand new trader, the micros, there's only 3 of them on TradeStation. The micros are fantastic. So I watch the Aussie and I trade the micro from it. The nice thing about the micro, guys, is as you trade this, so it's not really in a place to trade right now, bullish or bearish. We don't look at the micro to trade, we look at the full contract. When the full contract says take an entry, we trade the micro. So right now, if I wanted to trade this position, right, if I just went ahead with a market order on this position, if I were bullish, I would click buy. I need $160 to do this trade. Order filled right there. I mean, literally, that's as hard as it is. And every point, every tick that this moves, I'm up or down $1. So I don't have a lot of risk in this trade. So instead of trading the full Forex, these are how I trade them. I find the manipulation of pips is nowhere near as deep as it is on the regular Forex. Well, it's 3 in total, Joan. So you actually can see all of the M symbols right here. Whoops, too much. So the euro, the Aussie, and the pound are the only 3 that TradeStation offers. Yeah, Robert, I will. I'll try it on TOS. Absolutely. I've got a TOS account. You're welcome, Joan. All right, guys, we've got like 5 minutes left, and we've not looked at any symbols. So give me 2 or 3 real quick, and I'll take a look at them for you. So what stocks would you like me to look at? Gilead. So right now, Andrea, we're looking at Gilead and what's going on. It's sitting right at a Fibonacci line, the 236, which is a hesitation point. But because we've gone sideways for so long, we are not anywhere. I'd be more than happy to take a bounce off of there, but we're not at that point yet. So what I would need to see, and Andrea, this is where the difference comes in of how I would trade it, how most others. Many will say if it breaks the 236, the 81.23, buy a put. And I'll tell you right now, I'm not saying you can't make money there, but I can't make money there. I won't take that trade. I don't have a clear signal. The 8 is about to cross the 21. So here's what I want to see happen. I want to see, I'll grab a drawing tool. I want to see the moving average come here, the 8, which is the pink line, stock to come down, come back up, test the moving average, and then fail, and that's where I'll take a bearish trade. 40%, 30%, 20%, manage the last 10%, the last one contract. Right? That's how I look at it. So not quite set up. That's what I'm looking for before I think this trade is what it needs to be to take the trade. SWKS was Paula. Let's see. Oh, wow. So Paula, I don't have a fib drawn on this. Who is this? Skyworks Solution Semi. All right, semiconductors. So we're going to come from this swing high down to this swing low right here. Right, and what happened? We just broke through with a vengeance today. We pushed up above the 618. No trade taken there. We're looking. This was well, we're not updated today. This is from yesterday. So actually, let me see if I can do a quick current session. Nope, no. We don't ever update Trade Navigator and do. Well, I say ever. I don't normally update Trade Navigator and do the criteria for intraday. I just leave that from yesterday's. So what I want to see is, has this pulled back under the 618 now? If it hasn't, we're looking at two different trade setups, so it'll make a difference, Paula, as to which one we do. No, Lisa, the micros are futures on Forex. The minis are future Forex. The micros are mini Forex. Yes. So Al said SWKS looks a little bit like a wedge. Possibly, Al. This fib pattern is setting up very nicely. It's taken a real long time, though, for my internet to upload or to update. Okay. And, Paula, that's what I was looking to see was right there. Okay. Are we getting this failure? Now, the failure is going to require us to close below the 106.06. Close below. If we can get that to happen today, Paula, and it continues to move down, I would look at 104.66 and 103.25 as my two downside targets. Scale out of half the trade at each will still give you a high probability setup if you don't understand the 4-3-2-1. If we continue to move up, Paula, I'm looking for what's called the Fibonacci four-step trade. And as long as it doesn't close above 109-ish, we're okay, right? But that we're not there yet, so I'm not going to go too much into the details on it. But I'm looking to see, do we get to move down? If it doesn't move down, I need to close above 108 and below 109, and a failure below 108 to take a bearish trade. Robert said the futures are also taxed at 60-40 long-term gains as opposed to ordinary income. Okay. Yeah, there definitely is a different taxation inside of there, without a doubt. So, guys, if you just so you know, because I see a couple, 2-3 things, and I know Mel has chimed in there a couple of times with some of you. So, guys, if you have questions, though, you can send an email to support@wealthbuildershq.com, and we will be happy to answer them. For those of you that are working with Lisa or any of the other of our affiliates, you can ask them questions as well, but normally they're going to forward it to us. But you're more than welcome to do it that way as well. If that works for you, I have no problem with that. Let's see. So, guys, in your members area, you will see, you may have noticed, hopefully, for this workshop when you registered, if you go to register for a power hour now, it's going to take you to our power hour page, which has four registrations, not one. So this way you can register for all four. You can just register for the next one. And this way it allows us to make changes over the next couple of days without killing ourselves that we're trying to cancel the registration for today and only have a registration for next week, starting at 12:30 today. But you've got all of these. You'll get all the email confirmations on them as well as you go through and do that. So that'll be a tremendous help. Guys, I encourage you to get registered for this week's E-mini thing. Tonight is the E-mini think tank for this week's Monster Market Movers. Right, it's coming up on October 19th. Even if you cannot be there live, it is recorded for you, and you do get access immediately to all of the videos, the manuals, all of that are in there. And then, Andrea, and for all of you, any of you that are wanting to really learn how to trade, guys, I'm sorry, the basics to me starts with Fibonacci's. You need to learn how to trade harmonically. You need to learn how to trade with nature. Human emotion is what we're dealing with. When someone says the market is chaotic, it is chaotic, but it's planned chaos. And Fibonacci's is just that, planned chaos. You can learn how to do this. It's just going to require a little bit of work, time, and effort on your part. But I certainly can help get you there if you will learn the basics of what we do. Andrea said, I've been watching the futures for a few weeks. It doesn't look like it moves enough to trade. Andrea, there's a ton of trade movement in there. Again, it depends what future you're looking at and how much is enough. Guys, I'm going to go over this trade tonight on exactly why I took the trade. But the trade was taken on this bar right here, right at about, we'll call it 53. Yeah, right about 53 is where we entered on this bar here. And guys, I got out of the majority of the trade right here at 73. That was a 20-point move. And on 10 contracts, if you had one contract, that's $100. If you had 10 contracts, that's $1,000. So there's plenty, and I had more of a move take place. I didn't exit all of it, but I exited a majority of the contract, or a good amount of the contracts at that point, right? And then the failure was pretty clear. Boom, 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 boom. We push down. We get this bearish bar, big bearish bar breaking down below these bottoms here, all these opens and closes. And there was another entry, and look at that, in 4 candlesticks, we moved from 85 down to 55, 30-point move, $150 move on one contract. So there's definitely the move there, Andrea. It's identifying trade setups that will give it to you, is what it comes down to. Karen, this one will be up next week. I won't get it done this week. It'll go up next week. I just don't have the time during the week to get them done. I'll get the one from last week up this week. We're just trying to work out a system. I've done it before where we were putting recordings up immediately, and we saw the attendance drop off dramatically in the event. So I want people at it live so you can ask the questions. Correct. Paula said I got it. In at 860, out at 880. Right. 20-point move, Paula. And that is $100, $5 each point on the YM. So Marcus is asking, where are they put up? So, and I'm assuming you're talking the videos. So what will happen is they're going to be on our YouTube channel, which you'll find on our homepage first, right? Is the YouTube channel, bottom left corner, if you don't want to go search for it. But once I get them up there, I put them on WBHQ, Wealth Builders HQ TV, and you'll see under technical analysis, the last power hour up there is 10-2. So this week, probably not today, tomorrow, I will probably get the 10-9 up there. If I have the time to load the 10-16, I will, but it's 40 minutes with the process of what you got to go through at YouTube. And I just have not been able to simplify it with what has to be done between YouTube and my site to get it on both. It's just not been fun. So, all right, but that's where you'll find it, Marcus, is right there. Awesome. Cool, Robert. Well, yeah, I don't know if we're going to get September's up at all, Robin, because I had made a decision to not post them at all here and then decided again to go back and put them in. So I just don't know if I want to go back and it's more for YouTube views. I don't want to be putting something up there that people aren't going to watch because it's old. So that's why we kind of do them one at a time. Marcus says, thanks, I'll message you. We need help streamlining these processes. Okay, cool. All right, so guys, go ahead and get yourself registered for both. They're both in the store. Get yourself registered for the online workshop, Monster Market Movers, and get yourself registered for that Fib Secrets if you haven't seen it. And guys, there's others there. I mean, I wouldn't go and take the old Monster Market Movers now, but Cheapskate Trading, we had max capacity in our room when we did this, right? And guys, I've gotten phenomenal emails from it on how much it's helped. Guys, all of our recordings are $99 for 30 days. So well worth it on those two. All right. So with that, Andrea said this class was great. Thank you. You are quite welcome. Roy, great to hear from you. Marcus said, yeah, Cheapskate Trading was great too. Yeah, it was a good class. It was a good class. So ladies and gentlemen, have a wonderful and awesome day. God bless. I'm off to play with the dogs. You're welcome, Robert. And I will see all of you at, well, hopefully I'll see some of you tonight. I know I will, at the E-Mini Think Tank. I hope to see some more of you, because many of you are registered already for Monster Market Movers, this Thursday on the 19th. Guys, even if you can't be there live, just get the recording of it. It's okay. It's still well worth it of your time. All right. Demetrius, remind me next week, and I'll go into that a little longer than we could do here for that, but I will do that if you remind me next week. Bill, I'm not sure. We're working on that now, trying to increase capacity on it. So, and that's because I created for another vendor, an affiliate. I've got to give him first shot at all of them, and if he doesn't want to take the next batch of seats we open up, then we'll offer it here. So, guys, if you have an interest in that Power Options workshop that we're talking about, that's one that was like the Market Insights. That's what I'm doing now. You need to send an email to support. Mel and Lisa are keeping lists of those that are interested in the next time it opens. And guys, it's going to be very simple. Don't bother sending an email unless you're ready to give her a credit card when they call. It's literally, don't do it, okay? Because I'm only going to have a very limited number of seats. It's going to fill up in 5 minutes after we open it up again. So when you're ready, expect a phone call that says, okay, we're getting you in now. Give me the credit card number. So if you have that interest in getting in that, then send the email off to Lisa and Mel. If not, no worries. It's full right now anyway, so that's okay. All right, guys, have a great day. God bless, and I will see you all at our next Power Hour class. Take care, folks. Bye now.